So, team, we have looked at a few stocks there, and I also want to talk about XLE. XLE is also at a very, very major key level that has been getting some demand here. I want to bring it to you guys, to the team's awareness, so that you can decide whether you want to catch this opportunity with your own defined stops. So, what am I seeing here so far? I will show you. So anytime that we have got a pullback to this rising support trend line, we have built a consolidation base, basically a supply and demand zone, and we have rallied right back up. We see a massive drop, basically a supply zone, a supply, sorry, not a supply zone. What am I saying? A base zone taking place, or a consolidation zone or sideways zone between a defined support and resistance level. Team, what creates support and resistance? What actually creates support and resistance is supply and demand zones. The bottom and the top of supply and demand zones are the defined support and resistance key levels, and that's what they are. So this was resistance here 80, support was 75 for this particular one, which is the current one on XLE. XLE is basically the energy sector for stocks such as XOM, which is 23%, CVX, which is 19%, EOG, which is 4%, and so forth. And so far, we are seeing a support at 77, resistance at 81, and it looks very, very bullish. I swear to you guys, volume accumulation is coming in, and so far, this is just looking really, really good so far. So I know the quality looks blurry, but I'm going to share this video with the team as well after, so you guys can view it with better quality. But yeah, team, eyes on XLE, and what's going to move XLE? Let's take a look at this beautiful setup on XLE one more time for the major imbalance move back up towards 85. What's going to move XLE? Let's take a look. XOM, CVX, which is ExxonMobil, CVX. So let's take a look at, by the way, I also like VLO. VLO is not a big percent of it, but I also like VLO. So you can see XOM has been holding the support of this rising trend line here. It held support here. It held support. It held support here. And if we can see support here inside of this consolidation base, and if we do see price action holding above the 200 SMA line here, then we can anticipate a retest at 117 on XOM. Then let's go take a look at CVX. CVX also, it is trading near the support level here. These are definitely all good, great swing trades, you guys, for CVX, for energy. So if you really want to, ride sort of the momentum and the rotation of these sectors, like the way institutions, pension funds, and all these major institutions and market, firms and so forth. If you want to trade like them, this is how they trade, you guys, and it's very easy. You basically look at, okay, so what is XLE? What's inside of XLE, which is one of the SPDR's sectors, right? SPY, the top five S&P 500 stocks. You got CVX, you got XOM, and so forth. So you look at this and you're like, okay, that looks good. Maybe it'll hold support. I'm gonna take my risk with my stop loss at, let's say, 150, with my profit target at, let's say, 167, and then another one at 172, and the third one at 186. You can do long-term swings, such as probably even December. These contracts are really, really amazing, where you can target prior resistance lines and so forth. But yeah, let's take a look at an August contract. The 170. Wow, these ones have no value. What's going on? There we go. The July ones is really good. It's 2 months out, and you can try the 165. The 165 is really, really good. And the way we can trade this is, we can buy one and then we can average down another contract. If it loses, let's say, 30% due to some consolidation here, where it fails to make new lows, but it shows that there's clear demand coming in, and that's when we get the massive move up. So we're gonna keep an eye out on CVX. Let's go take a look at XOM contracts as well. For XOM, we can do the 110 call for July 21st. The 110 at the money, not at the money, but the 110 is trading at 3.0. And it has 12,000 open interest. But what I would like to do, team, honestly, if I were to really take my time on this trade, I would do something where I would trade not the actual strikes on these long-term contracts, swing trades, but rather the actual premiums of it. Because usually, what you're gonna see, right, once the stock ends up having what you want to catch is you just want to catch two big green days. Like sometimes, like you'll see some sort of news come out that'll give these stocks two big green days, and it'll make the options go up like 30%, and then another like 60% tomorrow, and that's all you want. If you had average down, you would get an easy 100% and so forth. And that's the thing. That's the kind of moves that we want to catch. And looking at XOM, I can see that the October 2023, the October 20, which is 152 days away from its expiration date. The 120 call has 5,000 open interest. Sorry, team, the battery died. I had to change the battery. Okay. It has 5,000 open interest, and then you also have the 115 call, which has 4,000 open interest, and we can get that one at 4.0. I know some of these are very, very expensive. But if we want to focus on, I'm telling you guys, like if you really want to focus on sort of growing your account, if you have a small account, you're gonna have to work with longer term out of the money contracts. But you're trading the premiums. You know that they're not going to lose all of their value because of the time. If it has 89 days, it's going to hold its premium. And that's the beauty of it. I'll show you how you can do this. For example, let's say as a trader, your account is a $5,000 account. You can do like the 120 call or the 115 call. You can wait for the 115 call to go to like 2.0 or something, right? Let's take a look at the 115. Oh, it looks like this option is new, so they just made it last week, so it only shows the data for this long. So for this particular contract, you can see it was trading at 1.7 when it was here, but if it does come back down to 104, right, and the options come back down to like 2.0 or even 2.30, you can hold this one, and if it goes deep in the money with you having 3 months left, the contract goes to 10.0. And if you buy, like, let's say if you just have one contract and it goes to that price, you make 500%. But if you have, let's say, you bought it at 2.10 and the option has 3 months remaining, but then it loses value, it goes to 1.50 because of 3 days of consolidation and a little bit of downside because of other market noise, then I'm going to use this opportunity by averaging down on this very long term option at, let's say, 1.50. And now, if we go to my target and the option goes to 10.0, that's an 1,000% for me at least because of the two contracts or something. If I'm doing the math right, this, even if I take one of my profits and my average cost is 1.50 and it goes to even 12.0 or 10.0 something, it's great. And these are the moves that we want to catch. And you don't want to catch like something like that where you want to target 500%. I'm not saying you can't. I'm just saying this is the actual beauty. And if some of you actually do take your time with some of these, it's gonna work out that way. And even if some plays don't work out the way you want those 500%ers, even if one of them do, I mean, my gosh, it's amazing. So, you can do stuff like this too, where you can basically swing trade these very long term. I'm telling you, like, this is a 115 call expiring in August, and if you saw that energy was really flushing and you got in on the dip because it had been dropping from 119 all the way down to 102, and you bought like a long term expiration, let's say at 1.80 area. This went up to 2.70 in just 4 days, and you could have made some nice profits on this nice bounce back up, which was very, very easily anticipated. But stuff like that, like you can really swing trade, and there are just so many strategies. I don't want to go on for too long, but Yeah, team, I'm really excited for these moves. I'm starting the 1K challenge, so you guys are gonna see some of these plays where we will end up swing trading these, and possibly, my gosh, I have some great memories, you guys. Like, I remember one time we did this. I did this with a team, and oh man, some great memories. Some great memories. I swear, some of our traders went to like 16,000, and it was wild. You guys, you just have to follow the rule, okay? Especially if you do mine, I'm not going to be easy on you if you make the same mistakes, because I made the same mistakes for 6 years. Are you gonna? I'm not gonna let you make the same mistakes for 6 years. If you make the same mistakes for 6 years that I made, then my job is pointless. What I'm doing is pointless. So that means you're paying me for no reason. Like, you're paid for my mentorship for no reason if you are not going to be learning from my experience. And that's what I really hope you guys take from this is just please follow my rules, because this is based on, if I bought one contract, I'm literally buying one contract because of this reason. If you are new, if you haven't been doing this for longer than a year, then I really encourage you not to do the numbers on your own, because I was talking. I was kind of. I was sharing that with my barber today. I was telling him about this sort of position sizing. The reason why this is bad is, keep in mind, you are comfortable with, let's say, everyday trading with like a contract with 150 or 200, right? And then you end up, or let's say you're comfortable with like 1.0 or 0.90, and you buy one contract every time, and that's how you've been doing it. But then you've been taking profits consistently, and now you have 15 trades on your belt that have been like that consistent, and you've been following the rules. All of a sudden you have a losing trade, and you're not willing to take the loss. And instead of, not only are you not willing to take the loss, you end up averaging a contract at 0.90, averaging another at 0.80, another at 0.70. Then you start to add 5 at 0.50. And now what you are actually doing is, because the contract is already against the trend and so forth, it's already losing value. It's going to significantly lose more value. And you just keep on amplifying the amount of losses that you have. Like, all the times that you took quick profits on these trades, you're giving it to this one, like, oh, take this one too, take this one, or take another trade worth of it on this average down. Why do it on this trade when we can do it on another trade? Just let the loss be. If the market recovers and gives it to you, awesome. If not, just let it be. Don't extend the loss on this, on this God knows what's gonna happen trade. Just let it be. And I promise you, as long as you traded single by single, you're gonna beat them over time. You're gonna be profitable, because over time luck is gonna be on your side, where you can only lose 100%, but you can easily gain 500% in one of the days. I mean, my gosh, if any of us, we had 4 contracts of Netflix, you guys. If just I mean, some of us actually did. This is why some of our team this week had like 1,000 to 6,000 profits, because they actually kept one of the Netflixes that just was super lucky to them, where they banked on. And that's what I'm saying. If we just get lucky on one of these, this is what we want. We want to limit our risk, but we want to extend our profit target, and call it luck. I'll take it, man. I will be consistent every day, respecting the market's rule, and I will wait for the market to reward me with a really good day like that, where I will be able to, maybe I've been doing so good where I'm confident, you guys, we're gonna keep this for another day. We're gonna be deep in the money, and it happens. We get lucky, or something happens. We go even more, and it short squeezes. We might bank hard, you guys. But yeah, that's all for me. I went on for too long. Anyone wanna share anything so far, team? If not, that's all for me. We can get off from here. I think we have some comments actually. CVS, then C. Oh yeah, so CVS is great, and CVX. The reason why I went back to energy is because it was on my watch list, but I had forgot. And once CVS was mentioned, it reminded me of CVX, which took me back to energy. So we are looking at both of those because as we mentioned, energy and XOM and so forth. But yeah, team, that is all for me. If there are no questions, I hope you all have a wonderful rest of the day. Uh, don't worry, team. I promise you guys, the thing with being a price action trader is that when you go into this week, you're going to see opportunities show up within themselves, and you don't have to be stressing on what you're going to buy. Just let price action do what it wants. Just understand what's going on, and you're going to be fine. Market will just provide you opportunities. That's all for me today, team. I hope you all have a wonderful rest of the day. See you all tomorrow. I cannot wait for tomorrow. I'm so excited, you guys. I slept really well this weekend, and I'm excited. My oh my, I wanted to send you. I wanted to talk to you on Friday, so that I can set you up well for this week. But just please hang in there, you guys. Take it easy. Keep in mind what I told you guys about risk management, and I promise you guys, once I do start doing like the 1K challenges with you guys. I think I can bring in more value, and I can basically help us with some of these longer term swing contracts where we can actually benefit from options the same way that we would with a stock, but with the options benefits. So and what I mean by that is like you will see an option go from 1.0 to 2.0. A stock, it's hard to see that, but with options, it's just it. We will take it step by step. Just take it easy, team. Please don't have a blowout. The only way you're gonna have a blowout, you're not gonna have a blowout from just failing trades here and there. You're gonna have a blowout from breaking the rules and averaging down, like basically adding money to the dumpster fire. As long as you guys control, you have to control yourself. Please, 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 just control yourselves, and we will be
I'm here.
fine. And you guys can ask, by the way, you can ask if we should average down. All right, that's perfectly fine. But if I say no, please don't average down. Just wait it out. And if I say yes, even if I say yes, maybe I'm saying it to another person. So look at it at the narrative. It's being mentioned, and yeah, this, and then you decide whether you should average down or not. But yeah, team, take care. I'm gonna upload this video, by the way.
Thank you, buddy.
Of course. Thank you guys for being here, Layla and everyone else.